Qantas finally gets back to pre-COVID capacity with strong demand for seats at the front end of the plane. Private equity group KKR bids $2.2 billion to break up Perpetual Limited, and times are getting tougher at Disney. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Thursday, the 9th of May, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, after the show, you have an interview coming up today with Alan Greenstein, CEO and co-founder of Zagga, a supporter of this podcast.
I sure do. We have a great chat about private credit and particularly how that area of investment can help the housing crisis in Australia. Now, there are two sides to it. There are investors to invest in private credit, and that's what Zagga facilitates that, but it also works with property developers to create new housing. So it's really interesting look at that part of the market, that part of the private credit market, really, Michael.
Yeah, it's coming up after the show. It is well worth a listen, Sean. The main story, though, this morning, COVID is finally over for Qantas with premium class bookings at record levels as air travel brushes off not just COVID, but higher interest rates and the cost of living crisis.
Yes, so demand for seats in the airline's first business and premium economy class cabins is stronger than ever. According to CEO Vanessa Hudson, she was talking at a Macquarie Group investment conference yesterday. Overall demand on Qantas's domestic and international network continues to be really good, she said. Ms. Hudson expects Qantas's international capacity to return to pre-COVID levels this month, while premium economy is proving to be the industry's most profitable class of travel. She said the airline has been reaching 90% on-time performance levels in the past week, and overall the carrier is now back to pre-COVID capacity. Woohoo! Finally. She also said demand for Jetstar travel, or as she put it, more value-based decisions, was strong.
I love that language, don't you?
Definitely.
Basically, those of us who need to fly in the cheaper airline, there's still demand there.
Yeah.
It's nice. Now, what did Vanessa Hudson say about improving the airline's reputation, given that it has conceded this week that it misled passengers immediately after COVID and agreed to pay $120 million in penalties? It was not the best week, I suppose.
No, but according to media reports, Ms. Hudson struck a positive and conciliatory tone. One thing going for her, at least on the public relations front, is that she isn't Alan Joyce, her predecessor. Notwithstanding this week's settlement with the Australian Competition and Consumer Commission, she said the job isn't done yet when it comes to repairing Qantas's brand. She said the national carrier needs to ensure that recent improvements in flight reliabilities are consistently delivered if the airline's to win back disaffected customers. Basically, it has to arrive on time, has to depart on time, and it has to beat competitors on reliability. Pretty simple, really. Well, certainly that's what it needs to do if it wants people to pay premium prices, according to the CEO. It's particularly important for Qantas because it has such a large share of the business travel market. Being on time also avoids all the costs incurred by having to shuffle crews and planes around. And, of course, avoiding those sorts of costs is good for the bottom line.
Sean, I've got to say you had a very interesting take on Qantas in the newsletter, the Fear and Greed newsletter yesterday. So it comes out kind of Wednesday mornings, and it's full of your kind of, how did I put it, kind of hot takes and spicy opinions on a whole bunch of business news stories. So head along to fearandgreed.com.au and put your email address down, and you'll get next Wednesday's edition of Aylmer Unleashed. But yeah, you did kind of have a slightly unexpected view on Qantas.
I have some sympathy for Qantas. Yes, that is very true. And I think with a few tweaks, Qantas could do what it's been doing and still not upset passengers. Like, do what it's been doing, as in selling ghost flights. That's not quite what I meant. But certainly be more flexible around how it sells tickets if it just communicates a bit better.
Yeah, it was a really interesting perspective. Get in now for next week. I'm sure there'll be plenty more spicy opinions. Local markets, how did they perform yesterday?
The S&P ASX 200 closed up just a touch, 0.1% to 7,805 points. Not much, but it's pretty good considering that it jumped 1.4% on Tuesday and it held on to those gains. Industrials and tech stocks did best, while consumer discretionary stocks were the weakest. Really, though, it's a bit of a lacklustre day, Michael. Among the large caps, ANZ jumped after its underperformance on Tuesday. That followed its result. Santos was also up more than 1%. Worst of the large caps was Rio Tinto, which dropped a little over 1%. Singapore's Olam Group, well, it came back and lifted its takeover offer for Nemoy Cotton for the second time in less than a week. Now it's battling for control of the, do you remember the word from yesterday, Michael?
Gina.
Gina. Yes.
Sorry, that was a big kind of breath as I went back into yesterday's show. First of all, I had to realize you were asking me a question. Like, oh God. There's always still this moment of panic whenever you ask me a question in the middle of the show and I'm not expecting it. But Gina is the word. Yes.
Gina is the word. So Olam is trying to buy the Gina, as is Louis Dreyfus, a French group. Olam said it's willing to pay 70 cents a share for Nimoy, trumping a revised offer of 67 cents a share, which Louis Dreyfus lobbed 24 hours earlier. Now, the Olam offer is conditional on securing at least 50.1% of Nimoy stock. It had already made a 70 cents a share offer about a week ago, but that was conditional on getting 90% of the stock. Now, Louis Dreyfus owns about 17%, so it was never going to get to that 90%. Now it has said that it will provide that 70 cents if it can just get over that 50% mark. It'd be interesting to see how that one goes. Also, Michael, yesterday, real estate portal Domain said group revenue jumped 17% in the March quarter. It also flagged higher operating margins this year. Investors were a little bit less than impressed. Its share price fell about 4%.
What about international markets? What's going on there?
Oil prices have fallen further. They're close to 2-month lows after reports that OPEC Plus might increase crude production. The group will meet on June 1 to decide its output policy for the second half of this year, adding to the downward pressure on prices with figures showing a rise in US crude reserves. Hopefully this will flow through to the local petrol bowser in the next few weeks, Michael, though my track record on predicting petrol prices is horrendous, so don't listen to me. Gold prices are flat, just under $23.20 an ounce. Iron ore's trading around $120 a tonne. Lumber prices are down, Michael, the weakest in more than 6 months, back to pre-COVID levels. And I knew you'd like that one. The Aussie dollar is buying just under 66 US cents.
I don't think we talk about lumber prices anywhere near enough.
No, we need to, don't we?
Yeah, like introduce a daily lumber report.
Do you know, okay, what's the biggest lumber exporter?
Which country?
Yeah.
Well, yes, that would be Brazil.
Brazil?
Yeah.
Yeah, no, that's you just pulled that one out of nowhere.
Well, no. Well, I figured that they've got a lot of trees, right?
Oh no, but think this a bit. I mean, it's a very developed nation. We're often compared to it. It's massive. In fact, its national
Like Canada
emblem, yes, is like a maple tree. Canada. Biggest.
Was it Canada?
Yeah.
Oh, God, genius over here.
Yeah. I think Brazil's like number 7 or 8 from memory.
Oh, still top 10.
Yeah, top 10. Canada's number 1, then Germany, US, Sweden, China, and Finland. What I do like, Austria apparently is making a huge play up the rankings in the lumber competition. Who would have thought?
And then occasionally when one kind of drops from like 2nd or 3rd down to 8th, they're like, timber. Let's move on, shall we?
Yeah, let's move on.
We'll be back in a moment with the rest of the day's business news. Sean, Federal Treasurer Jim Chalmers says next week's budget will contain initiatives to meet chronic housing shortages and says that he hasn't given up on the government's target of building 1.2 million new homes over the next 5 years.
Dr. Chalmers told ABC Radio that he's concerned about the lack of homes in the building pipeline, and there will be more investments in the sector next Tuesday night, including $90 million to train more apprentices, which translates to about 20,000 fee-free TAFE placements for builders. Dr. Chalmers said the government has already put $25 billion into 17 different housing policies. Now, remember last August, the National Cabinet agreed on what I would say is an ambitious target, 1.2 million new homes over the next 5 years. That's starting from July 1 this year. It's about 240,000 new homes a year. The current run rate's closer to about 160,000 new homes a year, so ways to go there. Meanwhile, the Treasurer said he is on the same page as Reserve Bank Governor Michelle Bullock on the need for the federal budget to help reduce inflation. He said there'll be modest but meaningful tax reform. as well in the budget next Tuesday. That is beyond the stage 3 tax cuts. They're probably going to be around tax breaks for businesses as part of the government's Future Made in Australia strategy.
Sean, another big story in the last 24 hours. Private equity group KKR will buy Perpetual's wealth management and corporate trust business for $2.18 billion. Though the deal wasn't exactly welcomed by investors, with the group share price closing down 7%.
This has been long and ongoing, shall we say. There's been a strategic review that has been going on for months. It included several potential buyers. Now, KKR, Kohlberg, Kravis, Roberts & Co., will take the wealth and trust parts of Perpetual, while the rest, basically an asset manager with $227 billion under management, will operate on its own, and it will be debt-free, which is significant. The name Perpetual will be owned by KKR, and the asset management business will have to rebrand. Perpetual is expected to use the proceeds from the sale to pay debt and tax that it owes the tax office. It will likely have some capital left over to return to shareholders. CEO Rob Adams will retire once the deal is completed. That's expected to be early next year, though there are some regulatory hurdles to jump through yet. Investors were pretty critical about the lack of detail yesterday, and some shareholders expressed sadness about the loss in funds management of the Perpetual name. It has an interesting history, Perpetual. It started as a trust company in 1886, started by a group of businessmen, including Sir Edmund Barton, who, of course, was Australia's first Prime Minister.
Oh, that is a lot of history.
Yeah, that's kind of cool history. And I think that there's some sadness that as a fund manager, that name will no longer be around.
Yeah, that makes sense. Now, Prime Minister Anthony Albanese yesterday said that China has admitted the Australian helicopter it fired flares in front of was in international waters.
Of course, this happened last Saturday night. Australia has protested to Beijing that a Chinese fighter jet endangered an Australian Navy helicopter with flares over international waters. Mr. Albanese said wording used by Chinese authorities in communications with Australia, particularly by saying that the Chinese fighter jet was near Chinese airspace, is confirmation that the Australian Defence Force personnel were both in international waters and in international airspace, and we're undertaking work on behalf of the international community enforcing UN sanctions against North Korea. The Chinese Foreign Ministry has accused the Australian Navy helicopter of flying within close range of Chinese airspace in a provocative move. Well, the Prime Minister came out yesterday and said, you said near Chinese airspace, therefore it was international airspace.
The federal government will spend $566 million over the next 10 years to map Australian resources, both onshore and offshore.
When making the announcement, the Prime Minister said he was surprised it hadn't already been done. The idea is that a complete map of Australia will provide information about where critical minerals reside, what's under Australia's earth and also Australia's waters. That could identify sites for carbon capture and storage projects and clean hydrogen projects, as well as a lot of other stuff. The funding means resourcing Australia's prosperity will be fully funded for the next 35 years. I love the fact Mr. Albanese came out and he said Australia's top geoscientists will be deployed to map Australia's resources. I wonder if that's true. Will our top geoscientists be doing, mapping the country?
Or are they going to be employed by some very big companies instead, already working elsewhere? I reckon this would be a fascinating job.
Yeah, and it is kind of surprising we haven't done more work to map exactly what's under the ground. I don't know. Yeah. Maybe it's too hard.
Imagine what they could find. Also, in my head, I'm just picturing a group of people out there with metal detectors going along the beach, just going, digging up. Anyway, bottle cap, yeah.
I have nothing to say. Move on.
Sean, property sector leader Goodman Group has upgraded its earnings guidance for the second time this financial year, even though it said global demand for warehouse space is weakening in markets like China.
Goodman is an industrial property company big into logistics and warehouses, digital infrastructure, all that sort of stuff. It owns, develops and manages property, often with other big investors. Now, its share price did really well in the decade before COVID, went through the roof during COVID, came off somewhat, and then has done even better. In fact, since late 2022, its share price has doubled. It manages many sites and has lifted its assets under management above $80 billion, and it's still seeing rental growth and warehouse demand. But what investors like is its $50 billion push into data centers, which is benefiting from the growth of AI learning and cloud computing. In fact, 41% of Goodman's $13 billion of work in progress is now data centers. Boss Greg Goodman said China is weak due to overinvestment, but the company has enough going on to stay busy for about the next 5 years.
Sean, less than 2% of documents in the My Health record system are being looked at by doctors, with incomplete records, poor interoperability, and clunky usability, hindering patient and clinical use of the $2 billion federal portal.
That's according to a new Productivity Commission report. It says My Health record was intended to be a central access point for a patient's most important health data, but it continues to be plagued by incomplete records and poor usability, according to a report in the Financial Review. The report said there's an estimated $5.4 billion of benefits from getting My Health record working for clinicians and patients. You want to cut the medical budget? This is a really good place to start, I reckon. There are now 23 million records with 1.2 billion documents on the federal portal, but the report said only a fraction are being accessed by clinicians.
Can you imagine one day in the future we'll just look back and go, do you remember a time when everyone was operating on their own systems and everything was separated and you moved between doctors and it was hard to get your records between one and the other? And we'll look at that and laugh.
Yeah. I just don't think it's going to happen soon, though.
No, maybe not, based on what you've said there. Now, turning to international news, the US last week paused a shipment of bombs to Israel over concerns about its looming ground operation in Rafah.
It's the first known time that the US has held up a potential weapons delivery since Hamas attacked Israel on October 7 last year and the Jewish state retaliated, according to the Financial Times. Israel sent ground troops into Rafah on Monday night, seizing the main border crossing between Gaza and Egypt, and has threatened to expand the operation further. Israel says Rafah is the last bastion for Hamas, but the Biden administration remains opposed to any operation in the border city that would not take into account the hundreds of thousands of civilians who have fled there.
Apple has unveiled new iPads featuring what it called, quote, an outrageously powerful chip for AI, demonstrating really the tech giant's growing focus on artificial intelligence services.
The company launched the M4 chip for its latest iPad Pro devices just months after it introduced the M3 alongside new Macs in October. AI developers' insatiable demand for computing power is driving big tech companies like Apple and Nvidia to increase the pace at which they push out more powerful processors capable of handling vast amounts of data. Chip design has become a vital capability for the world's richest tech companies. Microsoft, Amazon, Google, they've all unveiled new processors focused on AI in the past few months, according to the FT. Apple hailed the combination of M4's central processing unit, graphics processor, and dedicated AI capabilities, which it calls its neural engine, as a big step forward over its previous chips.
And mentioned this at the top of the show, Walt Disney shares fell nearly 10%, the most in 18 months, after the company reported a weak outlook for growth in streaming and visits to its theme parks.
Disney added more than 6 million subscribers worldwide in the March quarter to its core Disney Plus streaming offering, which of course, Michael, includes Bluey. But losses in the direct-to-consumer streaming business, which includes ESPN Plus, they're still going on, although they were narrower. They did decline. The losses declined in the March quarter. I suppose that's the good news. Disney doesn't expect subscriber growth this quarter, and profitability in streaming will suffer due to additional expenses for cricket rights in India. Now, Disney Star India paid about $5 billion. That's Aussie dollars, 3.1 billion US dollars, 5 billion Aussie dollars for 5 seasons of Indian cricket. It's got to pay that now. According to Bloomberg, revenue at Disney's theme parks rose 10% and operating income was up 12%, but it's spending all this money on cruise ships now. And that's part of the theme parks division. So that's going to hit the bottom line this quarter.
All right. Up next is the Fear and Greed Daily Interview. Your guest today, Alan Greenstein, CEO and co-founder of Zagger, a supporter of Fear and Greed.
All about private credit and particularly in the residential housing market. It's a fascinating chat. Alan is a great communicator, great way of putting it all into English.
Yeah, it is a good one. It's coming up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. And of course, don't forget to check out the new episode of How Do They Afford That, which came out yesterday. It's our sister podcast all about making your money work a little bit harder for you. This week's episode, Sean, I forgot to tell you what it was about yesterday. It is a guide to FIRE. So, you know, the FIRE movement, financial independence, retire early. And we actually kind of start, we begin with the end in mind. We kind of set a target of, is it really possible to retire at, say, 50 or 55 or 45, depending on kind of what you're doing and what you need to do kind of working backwards from that.
75?
75, yeah. Look, and there's something in it for everyone, Sean.
Yeah.
And I think if you head along, I'll put a link in today's show notes as well, but it's a really interesting conversation. So it is a working backwards guide to FIRE, and you can find How Do They Afford That wherever you listen to podcasts as well. Thank you, Sean.
Thank you, Michael.
It's Thursday, the 9th of May, 2024. Make sure you're following the podcast, and please join us online on LinkedIn, Instagram, X, TikTok, and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.